Okay, today I'm starting the first of my reflections around trading. And trading is not an easy thing. I've I started trading a number of years back. In 2016, I traded commodities, because to me commodities seem to be the easy assets that I would be able to find information, whether I was looking at energy, whether I was looking at grain, whether I was looking at precious materials such as silver, palladium, a number of commodities. I knew that I would be able to go onto the internet, see what are the developments that are taking place, the yields on crops, the seasons, things that will sort of just give me an idea on what is happening, the decisions that have been taken or are being taken by OPEC or they are likely to take, the impact on oil production, whether they will increase production or lower production. These were things I could read about. Geopolitical positions of dominant countries and the impact that they would have in terms of the industry or the trading environment. At some point I stopped because of the time it really took for one to be looking at the screen, and the fact that different markets were operating in different time zones, and hence I only had an hour for me to rest, and then thereafter the Shanghai Stock Exchange would start at 1 a.m. South African time. I wasn't that good at it. I was just average. The portfolio never fully liquidated. I just kept the balance that was there, and then I then lost interest. I resisted getting into crypto at that point in time because I was very weary of assets that I did not understand what are the reasons for the movement of the prices in the market. Sadly, forex market was one of those to me that was very erratic and highly susceptible to geopolitics, but crypto was even worse because I didn't understand it. Came COVID-19. Towards the end of the pandemic, I really got into crypto market. Took a position on Shiba Inu. The position went north. Happy, thought I was a genius. I got hooked. So now I've been invested into the crypto market since 2021. No expect of any measure. However, there are many aspirant traders that are either active in the market or thinking about being active in the market, or people that are just seeing, whether it's on different kinds of social media, the gains that are purported to be made by others, the wealth that is purported to have been created via crypto or via trading, and legends of masters that are offering training courses that are very exorbitant. Certainly, I'm in no position to say this one is good, that one is bad. However, one thing I've learned about trading is, to start off with, you need to understand what trading is all about. Trading is about the movement of value in the market. Any type of assets, same it will be in the crypto market. And therefore, you having the precision of timing to take a position in anticipation of whatever trend that you anticipate. Whether you are anticipating a bull run and therefore you take a long position, or whether you are anticipating a bear run and therefore you take a short position. that's really what trading is all about in any of these markets. And how do you then get to this thing that will give you an idea to anticipate? So there are two streams in trading. There's the fundamental analysis and technical analysis. In crypto, what has assisted me to get to understand the things I feared that the market did not make sense was to get to understand the token and the tokenomics. So this token that is there, before you think it's going to go up or go down, what is this token all about? Everything is on the blockchain, but what is this one trying to do? What problem is it solving? Now, we know there are significant problems in crypto that we know tend to be pervasive, and that would be decentralization, it will be scalability, as well as usability. And therefore, how do you make sure that everything is able to interconnect and operate in an ecosystem with other tokens? And what solutions are they solving? Certainly, from the pioneers that have been there, Bitcoin, post-Bitcoin, Ethereum, everyone in the market has been complaining about how expensive are the transaction fees of Ethereum. And therefore, some of the tokens that have come through the ecosystem, such as the Solanas, the Suis, have really come in to try and lower the transaction fees, improve the number of transactions, and operate on different chains in order for them to give the utility that is required in the market. And therefore, there are these terms that I used. But first, to begin with, you have to understand these are the two tools of analysis. It's a technical analysis and a fundamental analysis that you have to apply. What is the fundamental analysis? Fundamental analysis is what I've just said. What is the reason for the existence of the token that you are looking at investing? What is it solving? Has this not been solved before? If it has been solved before, what are they going to do differently? Now, that understanding helps you to locate this token in the broader ecosystem of the role that it will play. And this is what enables a trader to understand whether there will be a need for this token. Excuse me. There would be a need for this token, or there may not be a need for this token. And therefore, it allows you to have this thesis. You would hear traders talking about what's the thesis, really, what is the usability, what is the reason for existence. And the technical analysis is nothing other than having to use a number of technical instruments that will help you to see the trend lines, the movement, and therefore anticipate what the next is going to be. But you have to use both of these, because there is nothing that says number go up will always go up. A lot of people get caught in that. So those are the bases that are very key in trading. But before you trade, an advice that's often given, which is not a financial services advice, but an advice that is often given: don't trade money you're not willing to lose. And this is for you to keep your sanity. Because often people who use the money that they can't afford to lose, who go and open up debt in order to go and bet the money that they can't afford to use, that is gambling. Trading is not gambling. Trading is a science. Trading is not a get-rich-quick scheme. In trading, as much as we may be taught by the same tutor, the same mentor, there is no guarantee that all of us will have the same results. And therefore, nobody can guarantee anything. You can see any graph that you look at in the market. It's erratic. It's erratic. It almost looks like a heartbeat. So therefore, how do you anticipate that heartbeat? Often people would be convinced that we are part of an inner group and therefore we know things before everybody else know. Please be careful that those are not tantamount to breaking the law. Insider trading is a crime, and therefore you have to be very careful on trading, that you are trading on par with all other traders. Yes, you have to read everything you can find about the token that you want to invest in order for you to get more fundamental information and understand the fundamental ethos and the developments that are taking place in the people behind the scene, the developers, well, the foundation if there's a foundation, or the owners if they are owners, or the business that just brings it on board. So these are the basics that I often would advise people who want to get into the crypto market, that please calm down. The fact that your friend and your friend's friend has just told you now about Shiba Inu, about Pepe, about Popcat, about all these wonderful memes, Doge. You know, Elon Musk is going to be, and Vivek are going to be running the Department of Government Efficiency, and that department is called Doge, and therefore Doge is going to the moon. There are always people who are shilling the coin. Now, to us, the word shilling means somebody is overhyping the coin. Some of those people are actually paid influencers. I'm not saying all of them. Most of them are paid influencers, and therefore they will influence the trend that they are incentivized to influence or motivate for or persuade their followers for. Be careful. In trading, like in anything in life that has something to do with wealth creation, somebody has to lose money for someone to make money. Now, I don't mean lose as in a negative context. If a merchant is selling, and maybe they are selling apparel, you have to part with your own money to get the apparel that they are looking for. In trading, for somebody to make money in their trades, somebody would be losing money that they've also put on their trades. Now, sometimes people do this artificially, which is illegal. We call those rug pulls, where people are overshilling a token and they know at which point they are going to pull the rug. When I say pull the rug, they are going to liquidate their positions. We hear these wonderful stories of people that have taken leverages and they've 100x and they've done all of these things. Be very, very careful about the impulses of trying to get rich quick. You can get rich quicker in winning a lotto than in trading. Trading takes time. It takes time. Not saying there are no people that have been lucky that they will go and get onto a meme coin and poof, the meme coin goes to the moon and they've made money, and then they are all over social media about how clever they were and the ingenious things they've done, just as much as there's been countless number of people on social media who've been crying tears of the numbers of money that they have lost. Just been reading about somebody on Reddit who said he's lost it all. He's actually tried to make the money back and he sank deeper into the hole. It's one thing, it's the divorce, lost the employment, took a wrong business venture, went and invested onto a wrong investment asset, and things just went haywire. Desperation is your biggest enemy in crypto or in investing, and what creates desperation is your inability to control your emotions. So trading is psychological. You must be a well-balanced psychological person. If you do not want to create desperation, trade with the money you are willing to lose. It's advanced traders who would sell the house in order to take a position. As Michael Saylor will famously say, sell everything you have to buy Bitcoin. Now that's a fund manager. This is somebody who knows investment. He knows Bitcoin. He knows the fundamentals of Bitcoin. He's done projections in terms of where the world is going, in terms of the fiat currency and what the alternative means of trade would be, or the storer of value, and therefore he knows what he's talking about. So he's then speaking from that conviction standpoint. But an amateur like me, who's yet to start or has just started in crypto, I can't take everything I have and throw it into a coin. I'm not even sure what it's going to do, but I know it's a buzz. There's a general saying in crypto that is said in tongue-in-cheek. Doesn't mean anything. However, it's indicative of something, that when people that are not necessarily in trading, do not necessarily spend their time in trading, following the market, everybody is talking about a coin or a token. When even your barber shop that doesn't do trading is talking about a coin or a token. You go to your tattoo artist, they are talking about this coin, nobody knows anything about it. You must know that that token is oversold. When people who know nothing about this have also heard, you see, you are now in the stages where there's the herd mentality, and there is this thing we call FOMO, the fear of missing out, where everybody's running in. Now, those traders that have taken their initial position when that token had not been as profitable as it's widely now reported into the mass media and everybody is talking about, they start to liquidate certain of their position, or they start to take significant profits on their positions. And we often say that's about time for those that have really been invested for a long time into that a coin to start to do their serious analysis about significant profit taking, so that they are not overexposed to the point where the coin goes the opposite side. So these are some of the thoughts I want to share with you. This is my first recording. I just want to get your feedback from it. Tell me if it makes sense to you. It doesn't make sense, I'm talking nonsense. I would really appreciate to get the feedback from you. It motivates me. Please like, subscribe on my content, and then I will then talk to you later. The more I get the feedback, the likes, the subscription, it will be the more I start to continue on a regular basis with these recordings. Certainly it's something I wanted to do this year, and I want to do. I've got a couple of people who are pushing me, motivating me that I must do this as quickly as possible, because they really appreciate having to have these discussions with me whenever they get the opportunity. But now if I do these recordings, at least they can get them as regular as possible. If you're one of those, please like, subscribe. See you next time. Thank you very much. I wish you all the best in this journey. Thank you. Bye. Peace.